As many of you may know, Esquire Finance is a micro and SME lender, reaching a great number of businesses with a very small team. And I think that's what really makes you very unique, a very agile, efficient business, a team of 200. You do a phenomenal job of empowering entrepreneurs who are seeking that little, that's help to be able to get access to resource financing. And some of it's not just help, but it's basically operational. And you offer these non-collateral loans. A fantastic journey, which started in 2011, which you founded. Tell us a little bit about the key values. What motivated you to start this business?
So I think we saw a gap in the market. Like all of you are very familiar with, the SMEs in this country really don't have access to formal financing. A lot of the larger corporations are able to access financing from the banks. A lot of the micro or yung mga sari-sari are able to access financing from neighborhood lenders or microfinance institutions. Pero yung SME, there's nobody servicing the SME segment. And that's where we felt that we could add value. And so we felt that we needed to start something and build a market where no one saw a market. And the SME segment for us was a market that was big enough that needed to be addressed. There's about 1 million micro and small and medium enterprises in the country. Less than 10,000 have access to formal financing. 990,000 are still underbanked or underserved in terms of their financing needs. And that's really where Esquire came in to be able to bridge that gap between MSMEs as well as the banks. Again, we get our funding from the banks to be able to finance these SMEs.
So before we dig deeper into how you operate Esquire, how has the journey been for you? Was it very difficult to start? I mean, great that you identified this, but was it an easy ride starting? Did you find it very easy, or what were some of the challenges of building the business for yourself as an entrepreneur?
Well, like any business, when you're starting, you start with one employee and you start with one customer. And then you're able to scale it. And when you're in the right business, it scales very quickly, very easily. So if you're in the wrong business, or if the business is not in the right environment, then it's a challenge to kind of scale. But getting from one client to 10 clients, 10 clients to 100 clients, 100 clients to 1,000 clients has been a journey, but the journey's been something that's very fruitful because we see our businesses that we help really succeed.
Thank you. Last time we spoke over breakfast, you were telling me a lot about your obsession about business efficiency, and I kind of wonder, what does that mean for you? Why is business efficiency? If it's easy to, I wouldn't say, as you said, if the business is right, you're going from 1 to 10 and 10 forward. But why is efficiency so important?
So our 3 values are efficiency, flexibility, and integrity. Efficiency is being able to provide the product in a timely manner to a customer. When customers apply with us, it's not because they're applying for a need of funding next month. Usually the funding need is immediate. And so when they're applying, we want to make sure that we're addressing their funding needs at the right time with the least amount of documentation possible. Flexibility, we allow clients to customize their payments to us to make sure that their cash flows meet the cash flow of their payments. And of course, integrity, we'd like to do business with customers with integrity.
There's being flexible often makes it a challenge. I'm sure banks don't like to be flexible. They're very inflexible, and this is one of the value propositions. How do you manage to do that with such a small team? Your resources compared to a bank versus, how did you manage to pull that off as a company?
So I wouldn't say banks are inflexible because they're quite flexible with the larger customers, right? Banks are, when it comes to larger accounts or larger corporations, they are quite flexible. They have solutions that are flexible for these customers. But when it comes to what they call retail lending, then they try to put these customers into a one-size product fits all. And what we do is we try to improve on that flexibility that they have for their larger corporates and bring that flexibility to SMEs. So it's not that the banks aren't flexible, because the banks are flexible when they have to be, right? Especially in the larger ticket accounts. But I don't think they look at SME as a business lending solution. They're looking at SME as a retail product or consumer finance solution.
Thank you. We just mentioned the role of digitization. Tell us a little bit more about the importance of digitization for Esquire, and what's your long-term digitization strategy?
So we started this journey of digitalization maybe about 10 years back. The goal was to eventually roll out 100 branches. And then we decided actually you don't need that many branches as people are able to scale up and apply online. So then we said, okay, we'll try and build 10 branches. Today, we're at 3 branches and we're servicing customers nationwide. So we never got our 10 or 100. And so the importance of digitalization for us was not in 2018 or 19 before the pandemic, but it actually started in 2010 or 11 in our strategy of trying to keep our costs down while being able to scale up our business. And the digital transformation journey was really the way to be able to keep our costs down while being able to scale our business efficiently. And that's why digitalization, or the digital transformation journey for us, was very, very important.
Thank you. When I speak to lending companies and rural banks and different types of financial institutions, often they leave their digitization strategy to the IT department. But when I hear you speak and a lot of our conversation, it's very much at the heart of the business. How do you distinguish digitization versus strategy, or is it really the same thing?
Simple. Don't have an IT department. No, the joking aside, I think having a digital strategy has to be in the mind of every CEO or every visionary or every president that's running a business. Because if you don't have a digital footprint or a digital strategy in today's day and age, you will fall behind. And we saw this with COVID. The businesses that were ready to be able to operate online were the businesses that succeeded during COVID. In fact, some businesses did very, very well during COVID, despite the lockdowns, because they had an edge to be able to operate and to be able to establish themselves online.
Thank you. So we've come in Oradian, and we're now part of your strategy, so to speak. Thank you for the brief introduction. You went through that selection, but give us a little bit more. How did you choose Oradian? What were the key components that kind of push that decision over in our favor?
So I think it has to fit with our 3 core values, right? Efficiency, flexibility, and integrity. And we saw these 3 values in your company as well, where you were able to adapt your system to meet the needs of our customers as well as our internal salespeople. You were able to customize your solution without, trying to ask for further charges or increasing our package cost, because as a customization, it actually improves your system, and you understood what that meant. And so that sort of efficiency and flexibility is probably why we chose Oradian versus the other providers. And also the fact that you had local support. None of the other providers we were talking to had local support. All of the other providers, to be honest, were just with global support. And so having you with local support on the ground was really an advantage for us.
I'm definitely glad we have an office in Makati. So it is, in many ways, our philosophy has always been play to an angle where it's win-win. This does sound like a basis of choosing a partner versus choosing a vendor. And you reconfirmed that. Thank you. How has the last year been? How did our implementation go with you?
So I think there were some challenges in the beginning, trying to get the modules for especially the PDC customization, as well as the effective interest rate customization modules. But what was good is you supported us throughout that whole journey, and that's what made it much easier. We actually expected it to take longer, and the fact that it was done in less than a year, I think it was about 6 months in totality, before we were able to actually run the first loan on it, was actually very impressive from our side. And we like to celebrate the small wins rather than trying to, change everything at one time and then celebrate. So the fact that, we were able to get this first system live in an efficient manner, now the second system seems easier and the third system's even easier. And again, it's still a work in progress. It's not going to be 100% perfect, and nothing's ever going to be 100% perfect. And so as long as it's constantly changing for the better, I think we're happy.
And what are the driving factors for investing heavily in technology? I mean, I think back again to our conversation, you mentioned quite a bit about income ratios, cost to income ratios. Tell us a little bit more of how does technology play into the specifics of business?
So the more you invest in technology, the less of a branch network you'll need, right? And the less of a branch network you need, the less overheads you'll have overall. Not necessarily people, because to be honest, even with technology, you need the right type of people, and you need the people with that type of expertise. And so technology doesn't really enable cost savings from a people standpoint, but it enables you to be able to scale faster, even with the same costs. So even if it costs the same from a people and technology standpoint, you're able to scale faster without having to, roll out additional branches, so on and so forth. And so I think the investment in technology for us and in people for us isn't a cost savings strategy more than a scale maximization strategy. And so when we're thinking about the investment in technology, we're not thinking about the cheapest solution, but we're thinking about which solution will be able to help us grow the fastest. And so, a lot of people, misconstrue technology to the cost savings because it might not directly translate cost savings.
And so you mentioned early on, you saw a gap in the market. This was in 2011. How's that gap today in the market, and how will you use technology in which facets do you see that being key at Esquire to address that, if there is still a gap, or how are you going to be taking that on?
So I think the gap's actually widening, especially post-COVID. Banks and formal financial institutions find SMEs even riskier than they did pre-COVID. And the number of MSMEs are actually growing faster and faster than the number of clients that we can actually service. So despite having serviced close to 20,000 borrowers, we feel that the addressable market is at least 100,000 customers over the next 5 years. And we needed to have our back office in order to be able to scale the business up to that size.
Okay. Maybe just as a side question, if you see the gap actually widening compared to when you started, how do you feel about other lenders? Do you see that as it's a competitive environment or one that's hungry for collaboration?
I think the latter, because to be honest, it's such a big market that the more lenders there are, the safer it is for lenders, and the more access to funding MSMEs have. We're never looking at this as a direct competition. We're always here to try and help other lenders to try and get this space as well. So the idea is to really try and help them grow this market together.
So what advice would you give to other lending companies, other leaders within these organizations? What would be your key message as an industry player? What would you be kind of asking? What would be your ask from others?
I appeal to you to look at the SME sector. The consumer sector is always the more attractive sector because it's the larger customer base. With a population of 110 million, the consumer sector is always the more attractive sector, and it's easier to find the consumer market than it is to find the SME market. But the SME market seems to be the more loyal market. And so I appeal to you to look at the SME sector as a product, if not a whole line of business.
And where do you see more profitability coming in? Because I'm sure profits are driving the ability to then scale and grow. Where's the right place to be positioned so that it's sustainable?
Well, I think every sector has its own profitability matrix, right? The consumer sector is definitely a higher profitability ratio, but given the losses in the consumer sector, your net profitability might equalize. So to be honest, when you're doing SME lending, you're really not looking at profitability as your number one driver for doing business. It's really financial inclusion. And the reason companies like us are doing this is we're not doing it for profitability. Profitability, is good, but we're doing this for financial inclusion. And, we're partnered with the IFC to try and bridge this gap between the MSMEs. And even in years of COVID, where we sacrifice profitability to make sure we ensure continuity and financial inclusion, that's a step we choose to take, right? And in this type of business, it's very important to be responsible lenders and to support your customers, whether or not it's profitable for you or not, right? And so the idea is not to just look at profitability as the single driver of doing this business, but to really look at the financial impact or financial inclusion by the number of jobs created, by the economic impact, and by the growth of the SME sector and how that's helping the country grow.
So it's more about sustainability rather. And
It's all about sustainability. So it's more ESG than it is about profitability.
Thank you. Can I open up to the floor? Do we maybe have any questions that anyone would like to kind of ask or jump in?
I'm aware that Esquire has been in the industry in the Philippines for a number of years. I was just wondering if you have plans to go into the banking, Esquire Financing. Do you have plans to go into the banking, or does Esquire have a bank, and why or why not?
Yeah, so we're a non-bank finance company, and we don't actually have plans to get into the banking space. To be honest, the banks today are our biggest funders. We get most of our support from the IFC and the government banks, as well as the local banks, to be able to fund the MSMEs. And so up and until the banks are not able to lend to finance companies, would then be an option for us to try and get into banking. But as long as the environment allows for banks to be able to support finance companies to support their market, we don't see ourselves needing to operate a bank. But yes, we've been around, in the trade finance business since the early 90s, in the SME finance business since 2011.
Just one more. So does it mean that Esquire Financing, all your products cater to the non-bank sector?
Yes, we're a single product company. We do SME financing for the SME sector.
I see. Thank you.
Yeah, yes. Good morning, sir. My name is Alden Monzon from the Philippine Daily Inquirer. Sir, you said so yourself that the process or the act of lending to MSMEs is riskier compared to bigger companies. how do you mitigate the risk when lending to this smaller businesses? And also, do you have data, sir, on soured loans when it comes to MSME financing? Thank you.
So actually, our default rates are very, very similar to the ones of the large banks or large corporate banks. It is viewed to be riskier because it's more retail in nature. However, when these SMEs are dependent on you as a financier, the likelihood of them defaulting is actually very, very low because they know that once they've defaulted with you, they're not able to avail from any other institution, and then they shut their pipeline for future funding. And so I think the way we mitigate our risk is we lend for three reasons for growth: build, bridge, or buy. They're either building something, bridging a receivable, or buying an asset. So as long as they're lending for, or they're borrowing for one of these three things, which is growth of their business, then we see this as a big risk mitigator. Is the fact that their businesses are, consistently growing.
Hi, sir. Good morning. I'm Rafi Aying from the Daily Tribune. Sir, what is the current number of lenders being served by Esquire? And are you still suffering from bad loans?
The current number of borrowers.
Yes.
So currently we have about 20,000 customers that we're actively servicing. And like I said, less than 2% of that is what we expect to actually be to go default. So, yeah.
Sir Alden again, sir. Sir, how about when it comes to loan rates? Do you see it rising or falling in the next few years? And what do you think is the explanation for this trend? Thank you.
So for us, we haven't increased rates despite the interest rates going up in the last year or so. And the reason we haven't increased our rates to our customers is we want to make sure that we're fair to our customers. And as long as we can take the hit in terms of the rate hikes and our cost of funding hasn't increased by that much, we wouldn't want to penalize our customers for that. And so in terms of interest rates, I think that we're nearing the peak. I think we probably have maybe one or two more rate hikes that are expected. And then we expect inflation to hopefully taper down and interest rates to correct. But your guess is as good as mine. So, I don't have a crystal ball in terms of finding out when interest rates will start to correct, but we're hoping by, end of this year or early next year, we'll see a tapering down of interest rates. But we haven't done any rate hikes for our customers.
Hi, sir. Good morning. Don Yu from West Mid Lending. I'd like to get your, if you allow me, sir, to pick your brain. You mentioned your three pillars which you focus on to establish Esquire is efficiency, flexibility, and integrity. With regards to integrity, sir, I'd like to see how do you balance integrity with digitalization? Because with digitalization, you kind of take away the personal aspect of banking.
So I always like to say we're a click and mortar business, right? The digitalization's just the click, but the relationship's still the mortar. It's not 100%. That's why we don't consider ourselves a fintech. We're not 100% online lender. We still meet every customer. Every customer has a relationship manager, which takes care of their journey within Esquire. So the idea is to really be a click and mortar solution, not to get rid of that human interaction. Because once you lose that human interaction and it all becomes about the numbers, then, like you said, you lose the integrity. And so I think digital transformation, to be able to scale your click is very important, but at the same time, you need to scale your relationship management portion as well.
Add to that, one of the things that we like to refer to is very much around high tech, high touch. And the first thing that we see is when we work with our partners, by taking over a lot of the back office functionality, the automation, the efficiency gains, it frees up resources for financial institutions so that they're focusing on their clients, be it through product, be it through engagement and so forth. I also kind of reflect on what you said earlier on is don't have an IT department. I think that's really a challenge that sometimes, even banks face. It's this assumption that you need to control everything and have everything. There's a circular 808 by the BSP that came out 10 years ago, and it actually encourages the outsourcing of technology, putting it into the cloud. It's very expensive and very resource intensive to be worried about servers and technology. So if financial institutions can actually put that aside and give it to a trusted partner, it enables more resources to focus on the client. So I refer to as high tech, high touch, and I like this click and mortar, but the meaning is exactly the same. And no one loses integrity just because you automate a process. I think it's what you do with your tools that gives you the integrity. Yeah, not the tools you choose. Raj, I just want to reflect on your previous question. I think it's really nice to hear how you talk about sustainability, and I'm bringing that word up again. It's, finding a fair price to customers, understanding them. It really does. It does show that businesses can have a strong relationship with their clients, and they don't have to lose it, even though they adapt. So you said, we wanted to start off by having 100 branches. We have 3, but we're servicing more customers. And to have 20,000 accounts is just phenomenal. A team of 200. I think that really demonstrates how living to virtues and running a tight ship is really, really important. That's just some really fantastic feedback. Do we have any more questions? Otherwise, I'll jump off with my 2 final questions.
Rafael Amparo, Executive Director, Rural Bankers Association of the Philippines. I was wondering what your experience was with government guarantee institutions during the pandemic. Our experience, meaning the rural banking industry during the pandemic, was, first, field guarantee consolidated all guarantee programs into a single body, and it turned out into our advantage because they drastically reduced the processing time for loans that were subject of government guarantees. I was wondering if you're availing of government guarantees too.
No, unfortunately, as finance companies, we don't have access to the same field guarantee windows that the rural banks have. However, we did work with our existing banks, including the government banks, to make sure that our debt was serviced, on a timely manner. But we didn't have any windows of field guarantee available to us.
Raj, any predictions for the next 3 years?
So hopefully, in the next 3 to 4 years, we're able to hit our target that we set out last year, which is getting to 100,000 customers. And, having an LMS in place, as well as a back-end CRM in place, as well as the right kind of accounting software in place, will really help us scale, right? And so I think an investment in technology is exactly what it sounds like. An investment in technology don't look at this as a cost savings, but really looking at this as a way to be able to scale the business for the future.
And any secrets you want to share of coming up?
We're an open book, no secrets really. To be honest, Esquire is a single book, transparent organization that's IFC invested, and now partnered with Iridium, and so again, it's a very, very company with no secrets.
Raj, thank you very much. You really do live by your words. You lead by example. I'm a great fan, and I'm really happy that we're working together. Thank you very much for coming through this morning to share your story with everyone. I think that's fantastic. Really appreciate it. Thank you. Thank you very much.
Thanks.
Go further. Think bigger. with Oradian. To find out more about the future of extensible banking, get in touch with our team today.